First of all, your primary takeaway from this, when you had the news, what were your immediate thinking along the lines, the implications of it?
Well, I think the first thing that we were thinking about was that there was this divergence in the way that rate markets, bond markets, and inflation markets were quite concerned about risk at the beginning of the month. And if you look at equity markets, credit markets, and equity volatility markets, they were completely complacent. Equity investors and credit investors just did not want to listen about this idea that there was some risk out there. And the first thought was, this is the catalyst that is going to get risk to reprice. And I think that is what is going to happen. I think that's going to be, notwithstanding what is happening with the deposit insurance today, I think the bigger implication of this is that no longer can we rely on this idea that nominal GDP is going to make sure that credit markets are fine, and the Fed backstop, we know with the Fed marking to maturity, doesn't mean that everybody else is okay when they have to mark to market. So I think it's going to be a re-evaluation of the risks that are involved.
Does it stop the Fed from hiking all the way?
In my view, no.
Okay.
The reason why is because we've been doing a lot of work, as you might imagine, about whether there is any systemic risk that there is coming through here. It doesn't really seem like it is. If you look at where there are a few banks that the markets are concerned about. We think we've got a handle or a good way of actually measuring it. It's called the EDP framework. And it seems to have worked quite well in the last 48 market hours in terms of identifying the vulnerable institutions. But the bigger ones, they're all solid, at least for now.
How long do you think, the markets are, as you mentioned, somewhat relieved. Take a look at what's been going on in the short end of the curve in the Treasury market. The dollar is retreating as well. How long do you think this kind of goodwill is going to last then?
I'm actually quite surprised at the way that the market is behaving this morning. On Thursday and Friday, we had the bad news coming in. That was negative for the dollar. That was bullish for rates. And now we've had this good news that's come in, and the dollar's continuing to fall, and rates are continuing to rally.
Yeah.
So at this moment, I would actually be bearish rates, bearish bonds. I'd be bearish equities, bearish credit, bullish dollar, and bullish volatility.
Yeah, absolutely. We just had that chart about liquidity risk not really being that apparent. But, the thing is, as QT goes on, we've got, I suppose the reserves continue to fall. We've got also at the same time deposits likewise. But over the past year, separately, banks have been increasing their borrowing. If there's so much excess liquidity around, why the need?
I don't think there is a need. I think what they need
so why have
to
they
be
been doing that?
Well, I think the thing is that the debate around in the market has all been focused around what is going on with interest rates. But actually, the thought that we had all the time was that the way that this economy is being restructured in a low interest rate environment actually means that when you raise interest rates, for some people, it actually increases the money supply rather than decreases it for them, right? So the way that you want to be controlling inflation is actually by speeding up QT, but that's a debate that nobody is really having. Now, one other thing that is quite interesting is that even though we've had this Fed action that's come in this morning, there's a measure on Bloomberg, you can type it up right now, it's called CGUSKRTE. It's called the key rate because it's so important. And despite the Fed action, this has actually been going up today. So it's gone from green, where it was last week, to now it's flashing amber. And the markets are just shrugging that off, and it's a real surprise. But eventually they will come round, I think, to...
Yeah, we'll mean revert to the Mo Apabhai philosophy of trading.